The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Warren Buffett's net worth is allegedly exceeding $100 billion. From a reticent youth peddling Coca-Cola door-to-door to transforming Berkshire Hathaway into a billion-dollar conglomerate, the Oracle of Omaha has consistently ranked among the wealthiest individuals globally. What distinguishes him among the affluent is that he neither inherited his fortune nor amassed it via technological innovation. Instead, he accumulated his wealth by regularly succeeding in the stock market. How did he accomplish it? What actions did he do that distinguished him from those who had failed? This video will explore how Warren Buffett outperformed the stock market and achieved self-made billionaire status through investment. Warren Buffett was born in Omaha, Nebraska in August 1930, 1 year after the onset of the Great Depression. During his early childhood, he observed the difficulties individuals faced in earning a livelihood amid the profound economic crisis and promptly grasped the significance of money. Fortunately, his father was an astute businessman. Despite recently losing his position at a local bank, he utilized his limited funds to establish his own firm specializing in stocks and bonds, thereby ensuring sufficient support for his family. During his upbringing, Warren was a reserved and introverted child who predominantly spent his formative years in solitude, frequently perusing volumes from his father's library. From this library, he cultivated an early fascination with investing and the business realm. Enthusiastic to apply his newfound knowledge, he approached his grandfather, the proprietor of a small grocery store, and inquired if he might supply Warren with beverages to sell in the neighborhood. At the age of 6, Warren commenced his inaugural business venture, selling Coca-Cola door-to-door and earning 5 cents for each six-pack, with his grandfather's approval. He subsequently expanded his little firm by incorporating additional things, and within a year later, Warren was retailing chewing gum, magazines, and Coca-Cola, generating a commendable profit. At the age of 11, the boy expended all his funds to acquire his inaugural stock, purchasing 3 shares in an oil and gas firm named Cities Service, each valued at $38.25. However, shortly after the acquisition, their value declined to approximately $27 per share. Notwithstanding his anxiety, he maintained a firm grip and awaited their valuation to ascend to $40 before divesting. Despite having achieved a profit, he observed that the same shares subsequently surged to over $200. The news of his missed opportunity was painful, yet it imparted a significant lesson. 75 years have elapsed, and I have never predicted the market's movements for the following day. This is not my area of expertise. My objective is to determine if I am in the appropriate economic environment by holding quality companies for extended durations. These experiences and errors contributed to young Warren's wisdom, surpassing that of his peers. Several years later, his father was elected to his inaugural term as a U.S. congressman, prompting the entire Buffett family to relocate from Omaha to Washington, D.C. At the age of 14, Warren Buffett secured his inaugural employment, delivering newspapers for the Washington Post. Nonetheless, he was dissatisfied with his earnings, prompting him to accept a position with a rival, the Times-Herald, where he commenced simultaneous newspaper delivery, earning $179 monthly, equivalent to slightly over $3,000 in contemporary currency. Buffett subsequently utilized his wages and resources to purchase a pinball machine with a friend, which he installed at a barbershop. Shortly thereafter, they acquired 2 additional pinball machines, and at the conclusion of each week, they would divide the proceeds between themselves and the proprietors of the shop. Subsequently, they sold their machines for $1,200, and with the proceeds, Warren Buffett acquired his inaugural property, a 40-acre tract of land in Nebraska. The most astonishing aspect of this situation is that Warren was merely 15 years old when he purchased the land. Despite his youth, it was evident that this child from Omaha was destined for greatness. Upon graduating from high school in 1947, Buffett was enthusiastic to commence his career as a full-time stockbroker. Nevertheless, his father insisted on his attending college, prompting Warren to enroll at the University of Pennsylvania, financing his education via the income generated from his rented Nebraska acreage. Following the acquisition of his bachelor's degree in business administration from the University of Nebraska, he subsequently faced rejection from Harvard while applying for his master's degree. This rejection ultimately became a fortuitous opportunity, prompting him to enroll at Columbia Business School, where he encountered a transformative mentor, Benjamin Graham. Benjamin Graham was an economist and investor whose work and writings were already known to Buffett. That same year, Graham had released one of the most renowned works of his career, The Intelligent Investor. The book provided a systematic approach on achieving effective and consistent investment through the acquisition of inexpensive stocks, devoid of speculation. Warren rapidly emerged as one of Benjamin Graham's most distinguished students, and according to Buffett, Graham thereafter became one of the most significant figures in his life, following his father. Upon obtaining his master's degree in economics, Buffett was enthusiastic to commence his career and aspired to work in proximity to the headquarters of the largest investment firms in the nation and the renowned New York Stock Exchange on Wall Street. Nevertheless, a significant obstacle impeded his progress. Despite his extensive understanding in business management and investing, Warren Buffett was an introverted 21-year-old who could not embody the charming business mogul he is today. He experienced intense anxiety when conversing with unfamiliar individuals, occasionally resulting in vomiting due to sheer fear. Nonetheless, he mustered the bravery to enroll in a public speaking school, which proved to be one of his most advantageous investments. Investing in oneself is the most advantageous action one can undertake. Increased knowledge correlates with enhanced financial gain. Shortly thereafter, Benjamin Graham reached out to Buffett and extended a job offer at his investment firm in New York, which the young man readily accepted. There, he perfected the discipline of securities analysis, acquiring the ability to discern a company's intrinsic value through its balance sheets. Although Graham and Buffett held mutual regard for one another, their philosophical differences quickly became apparent. Buffett prioritized comprehending the operational dynamics of companies and asserted that management should be integral to the investing decision-making process. However, Graham expressed dissent. Graham prioritized the company's financial metrics and balance sheets, and his challenging demeanor further complicated collaboration, as he demanded rigid adherence to traditional investment principles, which Buffett's inquisitive intellect frequently examined. Ultimately, their conflicts were inconsequential, as by 1956, Warren Buffett was independent following Graham's retirement and the dissolution of the partnership. Nonetheless, the young guy increased his funds from $9,800 to $175,000 and, crucially, had direct experience managing a New York investment firm. He was prepared to form his own partnership, so converting his investors into billionaires while simultaneously elevating himself to one of the wealthiest individuals globally.